I get a digital copy of the Wall Street Journal, and what you just saw there was a video that was a part of the digital article that appeared in the Wall Street Journal on the front page on Tuesday, April the 19th. It caused me to realize this is something I saw about a month ago, and I shared with you. In fact, I shared it first on March the 23rd. I shared with you what I saw going on here in Birmingham, Alabama, and how developers, investors, were building a community of somewhere between 500 and 700 rental houses, houses that were not going to be for sale, and that investors were putting the money up and they were taking away the American dream, and that you don't own a home, you rent a home from now on. I then also shared that I saw something like that on 60 Minutes in another video that I put out on, I guess it was March the 28th, how Wall Street was moving into the housing market and the American dream was going away. And then I followed up again with it on March the 29th. So I feel that I've been ahead of this story only by about 30 days, and as a result, it kind of makes very pertinent the real estate course that I have created, and I'm going to make available to you at a discounted price, because this is where the money is going. This is where the future of real estate is going to be, in that bonds aren't paying a big premium, so you have to create another vehicle that will generate revenue that you can put into a package and make it similar to a package of bonds. Real estate is going towards rental. In fact, from what I have read and what I saw on 60 Minutes, in some cities, as high as 90% of the sweet spot of real estate, the median priced home, which depending on cities goes from, at least in the sane cities, anywhere from 250 to 400,000, that in many cities like Nashville and Atlanta, 90% of those homes are being bought by Wall Street. That's what this video is all about, to enlighten you as to the stock market isn't always the only place to invest. And if you, like I say in so many of my videos, if you can recognize the change before the change is actually implemented and get in front of it, whether it's to buy one of these real estate REITs or it's to get in and buy some of these single-family homes yourself and put together a package of a realtor, a contractor, a banker, and a property manager, so that you can grow with this growth in real estate. Is now going to be a rental proposition, and based on the article that I read on Tuesday, April the 19th, there's a lot of neighborhoods who are recognizing this and trying to stop it. Let's talk some more about that and where you fit into this. This is not financial advice. If it's anything, it's financial education. Talk to you in a second.
Best of Us Investors presents Carrie Griegmeyer.
We are in the period of greatest change in our economic history. And whenever change happens, the key is to recognize it before everybody else and get out in front of it and get involved in such a way that you benefit from the change. I want you to think, again, as I've mentioned many times, the digital revolution, the change from going to the shopping center to going to Amazon, the change from writing a letter and sending it to doing an email, the change from picking up a phone that had a wire attached to it to a phone that you just pick up and touch, and it opens the world to you. That's where we are right now, and I've talked a lot about it relative to healthcare. Well, it's changing in real estate as well. As I said, Wall Street is moving into the real estate space, and so if you can figure it out and connect the dots and say, okay, this is where I want to be, whether you want to be a landlord or you want to invest in a REIT that is going to be one of the real estate companies that buy this, or you want to be in the sellers side of it. In other words, there is going to be, we just added to all the millennials that want to buy houses to Wall Street wanting to get in and own the houses and then rent them. Well, they're going to have to buy them from somebody, okay? We understand that. The baby boomers are being a little reluctant about giving up their homes. But there is a thing called an iBuyer. This is a corporation who is saying, we want to take Carrie and Nita, the baby boomers, out of the equation. We want to just go buy their house for cash, clean it up, fix it up, and turn around and sell it. Well, we know now the biggest buyer is Wall Street. So the biggest seller, Opendoor, may have a beautiful opportunity in front of it. And I have just gotten access to two reports, one by a guru in real estate and one as a guru in investing. It's part of our Platinum program, but I want to share it with you so that you know the opportunity that maybe you can have. One, as what you should, whether you should become a landlord yourself and take my real estate program, or two, you should buy a REIT, the companies, and I've done 3 videos before. Here they are that explain to you who those companies are. And then 4 is to step in and buy the seller, the guy who's going around buying up houses and making them available, and now is going to be making them available to Wall Street. It's a company called Opendoor. I've gotten some research on it I want to share with you. What I want to share with you here is some research that I pay for. It's part of our Platinum program over at our Discord. I basically up front, I figure I'll spend about $70,000 this year for buying other people's research and then sharing it with my Platinum members. And I wanted, because I wanted to do this article or this video on real estate, rather than just share it with my Platinum members, I've decided to share it with everybody because I think this is an opportunity and a change that's happening in the real estate market that I'm going to be focusing on. I'm building a real estate course, and in fact, I'll make it available next week. And this is very pertinent to all that, and you as a channel viewer need to know about it. So it's about Opendoor. Opendoor is an iBuyer. I have been very involved. I just recently gave up my real estate license and will probably get it back. But they're an iBuyer. They have basically followed the lead of Zillow, who has since given up on it, and go out to people like me, retirees, and saying, if you don't want the hassle of working with a real estate agent, let us come and look at your house and we'll give you a cash offer for it. And then they go in and they fix it up and they sell it. Well, this is a report that I got, as I said, as a part of the information that I buy. And it's from Luke. And Luke basically says that I told you about Opendoor several weeks ago. And he goes on to show that Opendoor, since his first notice, and Opendoor is very depressed. I'll show you a second. That it has gone up 54%. And now what he's telling his readers that it's far from over. It's going to go up substantially. And what I don't think he takes into consideration is what I was telling you about Wall Street getting into this, that he is underestimating the amount of desire for his homes or their homes, Opendoor's homes, that's going to happen. In fact, the stock I think is right now about $7. He's saying it's going to be $20 before the end of the year, and then he goes on to explain why. That basically Opendoor's business strategy is to buy a house at $100,000 and then turn around and sell it for 110. So they've got a 10% margin. It takes about 60 to 70 days for this whole thing to move forward. And he is saying that even though they had bad earnings in fourth quarter, which has depressed their price, along with the fact that Zillow basically threw its arms up and said, we can't make any money in this, and actually stopped their iBuying. It threw a wet blanket over the iBuyer whole atmosphere, and Opendoor was a victim of it. So nonetheless, he's then now he's going to turn and tell us that he bought Mike Delpreet's research just recently, and I'm on Mike's mailing list as well, and he sold a research package for $850 as an analysis just in the last 10 days of what's going to happen to the market. And what I'm going to do here is share with you not only what Luke thinks is going to happen, but what Mike thinks is going to happen as well. And what they're basically saying is Mike's information is saying that Opendoor's premium, based on his research, is going to go up from 10% to 17%. And he goes on to explain why. Here he's showing that in fact their margin had dropped all the way down to below 4%, and now in March is up to 17. And he goes through and shows the substantiation of these numbers. And what he's saying is they're comparing here the buy to list premium, and that's this in other words, remember, it takes 70 days from the day they buy the house from me, the baby boomer, till when they sell it. And as you can say, this is the buy to list chart. This is the buy to sell. So they lag. And as you can see, their buy to list premium has skyrocketed. Again, this is because, and they don't allude to it, but this is because Wall Street is coming in and buying these houses. I don't think they've figured that quite out yet. They don't read the same articles I do and watch the same videos. So what they're saying is they're seeing this from from August, a buy to list premium going up. In other words, they can buy the house and the market is telling them you can sell it for this much more. Then their buy to sell lags. And they're saying the stock market, the buyers are not aware of this change. And so they're anticipating that their margins, that is Opendoor's, are going to go higher into the second quarter of 2022. And that's going to create them making substantial money. And he says, I see the stock making a run back over $20 a share. As I say, it's about 7. So that would be a threefold increase if he's right. Then he is telling us that the average price of the median price, sale price of houses has skyrocketed from January to July and now has leveled off. And I think that's true as a result of interest rates. The prices are not going up as they were, but remember, this is a 60-day lag time. So they have bought these houses back here, and now they're selling them up here. Okay? And as I'm saying, Wall Street's going to be one of their big buyers. So if I'm in any kind of business and I own an asset, what I want is more demand for my asset than there is supply, because that will drive the price higher. If you've watched any of the programs on TV about real estate, I just saw this last weekend where I believe it was somewhere in Kansas, maybe Kansas City, where people were lined up in queue waiting to get into a house that was just coming on market. And the fire marshal said you can only have so many people in the house at one time. So they were having to wait 2 hours to get a view of the house. And then the real estate agent was saying, and then we'll allow 48 hours to take bids. That's what's happening. And who I believe will end up buying that house in Kansas City will be Wall Street. So he then goes on to say this is an elite tech company. I don't know that I buy that they have a special algorithm. I don't know that I buy into that. And then he goes on to say, this is Luke, that this 17% premium is sustainable. And he's indicating that Opendoor's revenues have grown by 450% year over year. That basically makes sense to me, because there is a greater demand for homes than there is a supply, and Opendoor is going to probably profit off it. Then he comes back and he says he's saying, if I were forced to hold one stock for the next 5 years, I'd pick Opendoor without hesitation. I don't know if I subscribe to that. I'll wait and hold my. And then he's saying, I see it as a 100 plus price stock. Again, I don't know about that. The next sentence I do. Our research strongly indicates that after being beaten down for the past few months, tech stocks are staging an enormous comeback. We think this revival could turn into the biggest rally in tech stocks ever. Now, ever takes me back to 2000, after the depression of the dot-com bubble, and Amazon was down to, I believe it was $7.50 a share, and the rally is now up to $3,300 a share. So this is where this information came from. As I said, there it is, Luke Lango, the hyper-growth investing. I'm sharing this with you because I think this is a huge opportunity. I want you to understand what our platinum program in our Discord is. It is a collection of people coming together to say, wait, we all shouldn't spend $70,000 this year gathering information. Let one guy do it. Well, the one guy is Kerry, and Kerry raised his hand and said, I'll do it. I'll pay for the information. I'll pay for an analyst to sort through it. And that's what's happened. This was what my staffs went through, found this, and said, Kerry, you need to analyze this. I then took the other information that I have relative to what I read in the Wall Street Journal, the research that I did on Seeking Alpha and stock cards, and said, this is a stock that I want to put in front of my viewers because I think there's some potential there. And I know this stock. I know Zillow. I was a real estate agent. One of the first stocks I said I want to follow was Zillow. And I bought it cheap, and it ran up. And that was because they were... I remember this statement, and it was 90% of all first showings of all houses in the United States are seen on Zillow. And that, I know, is a fact. But then Spencer Roscoff gave up his seat and Richard Barton came in and they changed the direction of Zillow from selling advertising, meaning selling leads to real estate agents, to being in the flipping business. And that's what this is, professional flippers. And I said, no, I don't think that's going to work. Well, it didn't. And Richard basically bailed back in November on the iBuyer business, and it's been picked up almost entirely by Opendoor and a few others. And now, what Richard didn't see coming was the overwhelming shortage of homes, and that Wall Street was going to step in and say, wait a second, we're a buyer too. And we're going to be the biggest buyer, and we've got cash because we're creating an investment instrument where bond buyers want a bigger return, and we can give it to them. So that's what this is about, and that's what I want you to know about Best of Us Investors. Now I'm going to share with you how you can get involved in this $70,000 research program that I've put together. Before we get into that, I wanted to share with you the chart, the TradingView chart that is here for Opendoor. And you can see that Opendoor had a real run up as it got into the iBuyer business, and how the iBuyer business became very exciting to the market in February of 2021. And then as it just collapsed, and let me give you a kind of a view as to why it collapsed, and put an overlay of Zillow in here. And you can see it tracked, Zillow was a pioneer of this. And Opendoor came in, and you can see the orange line. They kind of tracked Zillow along the way. And then back here is when Zillow came out with its earnings and said, we give up. We're getting out of the iBuyer business. We're going back to just selling leads to real estate agents where we made money. And that pulled the whole iBuyer market down. As you can see, it just came tumbling down and reached its lows in March of 2022, and now is trading over here at about $8.24 a share. So that's where it's at. Has been as high as, what is this, showing a high of 34. Luke, as he said, he believes it will come back to 20. And let's take the Zillow out of there so that we get the price. So as you can see, it got up as high as about $40 a share. Luke believes it'll come back to somewhere around 20. Obviously, there is a resistance level here around 25. I don't know that it'll get that high, but I do believe that based on what I know and what I think is happening with the Wall Street getting involved here, I think a double is very easy before the end of the year. So let's talk a little bit more about our Platinum program. Okay, that's my take on the real estate market right now. I'm jumping into it in many facets. I like Opendoor. I want to teach you what I've learned as a real estate agent and as a real estate investor. And next week, I will put that course in front of you. And if that's where you want to go with this, because again, this is change. And that's where opportunity presents itself. It's not in everything is usual and everything is the same, because nothing is going to be the same as we move through the 2020s. Talk to you again tomorrow.